Hey Bobby Trades! I want to do a video analysis update on the top stocks that I personally want to buy and hold for February 2022 and beyond. So we'll start with the S&P. We have a 1, 2, 3, 4, 5 wave 1 and a wave 2. This is a big wave 3 that is subdivided into 1, 2, 3, 4, 5 waves. We kind of know this is a wave 3 because it goes well past the length of wave 1 placed at the wave 2 low. I believe that this wave 4 ending at the 38.2% retracement is going to stick and that we're not going to go below 420. So the length of wave 1 placed at that wave 4 low, if 420 holds, says that SPY can be heading up to the 550s, even the 560s for a wave 5 target. And if this is a wave 5, then that would be the blow off top kid at the bus stop moment for the S&P. Let's look at NVIDIA and AMD. I was going to make this video yesterday for January 31st, and I thought, you know what, I'll wait till February 1st. And we had this big gap in after hours for Google, for AMD, and for NVIDIA, and there's a lot of information that we can get from that. So this is a wave 1 and a wave 2 for NVIDIA. In my last video, I said that I'm going to give the conservative view of NVIDIA and AMD. With NVIDIA, I'll give the aggressive view with AMD, and I think the more accurate view is the aggressive view. But the conservative view is that this is a wave 1 and a wave 2. This is a large wave 3 in progress that is subdivided into 5 waves. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 and wave 4 of wave 3. So if we hold this wave 4 low of 208, the length of wave 3 placed at the wave 4 low is going to take NVIDIA at least to a new high of around 357. So that's kind of the conservative view that NVIDIA is going to go on a wimpy wave 5. AMD gives the more accurate view, and I say it's the more accurate view because it's a dramatic ABC correction. A lot of times wave 4 is a bull flag. It looks like this. It's a triangle. It's that boring bull flag before a wave 5 higher. The scary ABC correction that goes to the 61.8% retracement, that's normally a wave 2. So what I'm expecting is that if we take the length of wave 1 and we place it at the wave 2 low, then that wave 2 low is going to hold, and AMD is going to go all the way to 191, and in this view, that would be a minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. And that's a lot of good news for a lot of semiconductor stocks. So I think Micron is going to be a stock that benefits from this. The most aggressive view for Micron is that this is a wave 1 and a wave 2, and that this is another wave 1 and another wave 2. Now, what I'm going to say about Micron and Tesla is that the larger degree count doesn't really matter. That's kind of the benefit of LA wave theory. If you have one cycle kind of down, you kind of know all you need. So if we look at Micron right now, the most aggressive view and that this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So the length of wave 1 placed at the wave 2 low ultimately is going to take Micron up to 121. But all that really matters for Micron is just within the cycle from this low in October. That this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low in the short term can take Micron up to 109 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low, if wave 4 retests the wave 1 high, says that Micron is going to the 130. So I like Micron above 72 going into the 120s and eventually the 130s. I think that that's all going to happen with AMD and NVIDIA. I think that Intel is another one that could potentially finally get some rotation into it. There's a lot of laggard semiconductor opportunities, right? It's not just Intel. It's Taiwan Semis. It's Applied Materials. It's Micron. It's Qualcomm. So, it's not just like Intel's the stepchild. There's a lot of stepchildren to AMD and NVIDIA, and I think they're going to start to benefit. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 78.6% fib. So the risk reward is very nice. If Intel's above 43, then this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low says Intel's going to 71 before a shallow wave 4 and a wave 5 higher. So that's Intel. I think that Applied Materials is a very similar idea to Qualcomm and Taiwan Semis and Micron, that it really consolidated all throughout 2021 and had an ABC correction. And I think what Applied Materials AMAT did, this is a wave 1 and an ABC wave 2. This is a wave 3, a wave 4, and a wave 5. And then all 5 of these waves make a large wave 1 within the cycle from this low in May. So from the May low, this is a wave 1. We end wave 2 with this beautiful wick at the 78.6% fib. So there's a nice risk reward right here. If Applied Materials is above 123, 114 would be a clear invalidation. The length of this rally placed at this low would give a minimum wave 3 target of 176 before a shallow wave 4 and a wave 5 higher. Here is Taiwan Semis. I believe that this is a wave 1 and a wave 2. This is a wave 3 and a wave 4. So the length of wave 3 placed at the wave 4 low eventually can take Taiwan Semis all the way to 208. I think very similar to Micron, very similar to Applied Materials. From this low, this is a wave 1 and a wave 2, so we're going to see a more explosive wave 3 if Taiwan Semis is above 107, and that is going to be what eventually takes it all the way to 208. So I'm looking for a lot of these to be hit in the summer. Really, this is the long-term video though. So let's talk about Tesla right now. I think that in the Elliott wave community, there's some controversy about this large degree count. Is this a wave 1 and a wave 2? Is this a wave 1, a wave 2, a wave 3, and a wave 4? Here's the thing. It doesn't really matter. It doesn't really matter about the large degree count. All that really matters for Tesla is within the cycle from the March low, that this is likely a huge wave 1 and an ABC wave 2 that ended at the 61.8% retracement. So all that matters for Tesla bulls is if this is a wave 1 and this is the wave 2, the length of wave 1 placed at the wave 2 low can take it to the 1480s before a shallow wave 4 and a wave 5 higher. So that means that we want to see Tesla above 690, and it can go a lot higher. It can go up into the upper 1400s, the lower 1500s for a minimum wave 3 target. And if that happened, then that would basically confirm this larger degree count, that this is a wave 1 and a wave 2. This is a massive wave 3 in progress. As bullish as it sounds, as kind of wild as it seems, this could all be a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low says 1480 is a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. That's all valid if Tesla is above 690. So it won't just be Tesla. NIO got a little bit of a rally. I got upset. They said that NIO was a meme stock. That was so disrespectful. NIO is not a meme stock. It's a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. So the 78.6% fib is a little far of 15, but there's a lot of upside reward. That's kind of the thing with NIO, is if this count is accurate at all, then that means that this entire rally from this low is a huge wave 1. The length of wave 1 placed at the wave 2 low ultimately can take NIO up to 85. And if that happened, that would be a minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. What NIO bulls are looking for is that this is the left side of the base. The left side of the base is loose. It's very frustrating. And all of a sudden, the length of wave A placed at wave B high is where wave C ends. And we can see NIO have a high volume right side of the base. And we'll have all the classical traders be saying, hey, NIO's a beautiful base breakout when it's in the 60s. And they're going to be right, because it's not going to stop at the 60s. NIO would go all the way into the 80s before a shallow wave 4 and a wave 5 higher. And like NIO, like Tesla, it won't be alone. I think Xpeng and Lee are going to benefit. Oops, I didn't mean to show that I have my pitchforks out, but this is Xpeng. I think this is a wave 1 and an ABC wave 2. This is another wave 1 and an ABC wave 2. From this low, I believe that this is a wave 1 and a wave 2, so the wave 3 target is 77 before a shallow wave 4 and a wave 5 higher. So a nice stop right now is the 78.6% fib of 29. That's kind of right where we wicked. This could be a wave 1 and a wave 2. The wave 3 target at minimum would be 77, but it wouldn't be yay, we got a 200-300% return. It would be Xpeng just confirmed that this is an IPO base breakout. This is a year of accumulation on a stock that is very early in its life cycle. So I think Xpeng is going to do very well. I think it's going to hold above 29, go wave 1, wave 2, wave 3, up to 77 before a shallow wave 4 and a wave 5 higher. So I'm long Xpeng. I'm in it for the long haul, and I'm not going to sell if it gets to 77 because I don't think the institutions will. I think they're playing a long-term rally, and we don't really know what Xpeng can be. This is Lee. It's a wave 1 and an ABC wave 2. This is another wave 1 and an ABC wave 2, ending at the 61.8 and 78.6% fib. I think one of the best things that Lee, Xpeng, and NIO have going for it is that they're moving right now with Tesla, and that's a very good thing. This is a wave 1 and a wave 2. I think Lee holds 20 and goes very similar to Xpeng on a wave 3 to the 161.8% extension of 49 before a shallow wave 4 and a wave 5 higher. And like Xpeng, it's not, yay, we doubled. It's, whoa, we just confirmed that this is a huge base on a stock that is recently IPO'd. This is the allure of Palantir. It's the allure of Fastly. It's the allure of a lot of stocks that have recently IPO'd. The risk reward is significantly higher. This is a wave 1 and a wave 2. 49 would just be a wave 3 target before a shallow wave 4 and a wave 5 higher. So there's a lot of risk and there's a lot of reward on recent IPO stocks. Here's Enphase Energy. We got a little bit of a kick save from this stock. Just like Tesla, just like First Solar, if they are moving together in the clean energy sector, that is a very good thing, and it's likely they will, because Enphase Energy, Tesla, and NIO are some of the top holdings of the QCLN ETF, which we're about to go over. So this is a 1, 2, 3, 4, 5 wave 1 and a wave 2 for Enphase Energy. So right now, if we're above 108, the length of wave 1 placed at the wave 2 low can take Enphase Energy on a wave 3 higher. At the very minimum, we'd see Enphase Energy make a new high, but it wouldn't really stop there. The minimum wave 3 target would be 285 before a shallow wave 4 and a wave 5 higher. So we're talking about a minimum target where Enphase Energy doubles. So if it's above 108, there's a lot of reward for Enphase Energy, and there's the risk right now is very clear, that wave 1 low of 108. So that's Enphase Energy. We're talking about First Solar right now. First Solar, Enphase Energy, and Tesla, if they're all moving together, that's a very good sign. And they should, because they're in the same ETFs. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. I believe that, yes, this is a wave 1 and an ABC wave 2. So if First Solar is above 67, we can see why they made it difficult. That means that this is a wave 1 and a wave 2. The minimum wave 3 target would be 124 before a shallow wave 4 and a wave 5 higher. And that's kind of not even really accurate, because wave 3 would go much further than the length of wave 1 placed at the wave 2 low. But just to get a minimum expectation, the minimum expectation would be that FSLR holds 67, goes to 124 before a shallow wave 4 and a wave 5 higher. If wave 5 is the length of wave 1 placed at the wave 4 low and wave 4 retests the wave 1 high, then First Solar can go into the 170s. So that's FSLR. It's very similar to the idea that we see with Tesla and NIO, that it's not going to be a wimpy wave 5. This could be a much bigger deal. So here's QCLN. QCLN started to turn around. This is a wave 1 and an ABC wave 2, where the length of wave A placed the wave B high is right where wave C is ending, near the 50 to 61.8% fib. So if we have QCLN above 44, the length of wave 1 placed at the wave 2 low, at the very minimum, would give a wave 3 target of 120. So the first step right now is that QCLN will hold 44, and that it's going to go break this high. If it does, all the classical traders are going to say that this is a beautiful base breakout, and they'll be right, because the length of wave 1 placed at the wave 2 low says QCLN is going all the way to 120 before a shallow wave 4 and a wave 5 higher. So that's clean energy. Here's Camping World. We'll talk about value right now, starting to turn around. Camping World's also kind of in that automotive theme. I think that's one thing that a lot of people need to remember, is that NIO and Xpeng and Lee and Tesla, they're not just clean energy stocks. They're also auto stocks. So you're not just bearish, Tesla, you're also kind of bearish Ford, you're kind of bearish GM, you're kind of bearish, Volkswagen and BMW. You're bearish the entire auto sector. It's not just NIO and Xpeng and Lee. They're car companies. They're not just EV companies. And I think Camping World is going to kind of show that the automotive sector is going to include RVs. This is a wave 1 and an ABC wave 2. The length of wave 1 placed at the wave 2 low on the larger degree says that we're going to see that bull flag equal legs target of 62 get hit within this cycle from the November 2020 low. I believe this is a wave 1 and an ABC wave 2. The length of wave A placed at the wave B high is where wave C has ended, right at the 61.8% fib. So 28 is a little tight, but I don't think it gets broken. I think the length of wave 1 placed at the wave 2 low takes Camping World to 57 before a shallow wave 4 and a wave 5 higher. So that's CWH. Let's talk about Boeing. Boeing is starting to look good. It's starting to look good. I think that this is a wave 1 and a wave 2. This is a wave 1 and another wave 2, ending between the 61.8 and 78.6% fib. So if Boeing's above 170, the minimum wave 3 target is 363 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low would ultimately take Boeing to 437, and that would end this blue wave 3. So step by step, the first step is to see Boeing hold above 170. The next step is to see it go to the 161.8% extension, which is 363. Let's talk about American Airlines. How about Southwest 2? I think this is a wave 1 and a wave 2. This is another wave 1 and an ABC wave 2. So there's a little bit of a transportation theme going on. We saw UPS do very well. We're seeing a nice setup in Uber. I think that the transportation sector is going to very quietly include not just cars, but also airlines. This is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low says American Airlines can go to 30 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low could ultimately take AAL into the 40 range, and that would just complete a wave 3 from this low. So there's a lot of upside right now. I know it seems crazy that American Airlines is going to 30 before a shallow wave 4 and a wave 5 higher to 40, but it's all risk reward. And right now, if we're above 13.94, I think it's there. I think Southwest Airlines also kind of supports that idea. We'll talk about a few value names. This is a 1, 2, 3, 4, 5 wave 1 for Southwest and an ABC wave 2 right at that 61.8% fib. The length of wave 1 placed at the wave 2 low can take Southwest up to 81 before a shallow wave 4 and a wave 5 higher. So right now, I want to see Southwest hold above 31. That's really wide. That's really wide, but I just kind of wanted to show Southwest has fallen to the 61.8% fib. It's basically at where the length of wave A placed the wave B high is where wave C ends, and it's kind of supporting evidence that American Airlines and Boeing can do well. Let's make sure we talk about Disney and Draftkings. So Disney and Draftkings, I've talked about how the idea is that they're not just going to be reopening stocks, they're also growth stocks. And so I think that they show that a combination of reopening and growth can do well together. So this is Disney. It's a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 between the 50 to 61.8% fib. So that's a pretty wick right at the 50% fib. If we're above 126, the length of wave 1 placed at the wave 2 low can take Disney on a wave 3, and the minimum wave 3 target would be 254 before a shallow wave 4 and a wave 5 higher. It's another one where the classical traders are going to wait until Disney's at 205 and they're going to say, wow, this is a beautiful base breakout, and they will be right. So this is the left side of the base. The right side of the base I expect to be a very high volume base breakout. And it's going to be a pretty one. And it's not just going to be Disney. It's going to be a lot of transportation stocks. It's going to be a lot of reopening stocks. It's going to be a lot of growth stocks. And I think DraftKings and PIN Gaming support that message. I talked in my last video about how PIN above 33 is a great level. If we look at DraftKings right now, we're starting to turn around. 1, 2, 3, 4, 5 wave 1. ABC wave 2, the length of wave A placed the wave B high is where wave C has ended, right at that 78.6% fib. So the problem with DraftKings is that there's not really a reasonable low to trade against. Very tight would be 17.41. I like the idea of PIN holding 33 as a supplemental downside level, but I think this is a wave 1 and a wave 2. And we're going to see that DraftKings at the very minimum is going to go break this high of 74. The length of wave 1 places the wave 2 low, says 82 is on the table before a shallow wave 4 and a wave 5 higher. That's all in the long term. This is the long term video. Here is Credit Suisse. About Credit Suisse and uranium fuels. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. A lot of people have fallen asleep on the regional bank kind of sector. For me, I see diversification as being extremely important because the market is always rotating, and I think that as much as I love all the tech setups in the short term, eventually someone has to prepare for the idea that it's not just going to be tech mania forever, right? Eventually we're going to rotate in the longer term cycles into some of these value names that retail isn't very fond of. And I think a regional bank like Credit Suisse, an airline like Boeing, they're kind of nice to have because what if it's not tech mania forever? 1, 2, 3, 4, 5 wave 1, ABC wave 2 between the 61.8 and 78.6% fib. If we're above 8.28, then this is the left side of the base. The right side of the base will be a high volume base breakout that is a wave 3 taking CS up to 17 before a shallow wave 4 and a wave 5 higher. So what's all this price action? Well, it's either distribution or it's accumulation. I think it's accumulation. I think we're going to find that out for sure. And I think that this is also a way to get exposure to the financials. Here is uranium fuels. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. I believe this is another wave 1 and another wave 2, ending right at the 78.6% fib. If we're above 4.32, then from this low we formed a wave 1 and a wave 2. The minimum wave 3 target is 12 before a shallow wave 4 and a wave 5 higher. So I took a full position in UUUU right around here during that July massacre. I sold half around 11.70 and I kept the other half. So if it goes any lower, I'll add to the position. But anyway, I'm in UUUU and I sold half when I was up 100%, like I do kind of with options. If I'm ever up 100% on an option or a shareholding position, I'll gradually scale out as I get closer to 100%. So uranium fuels was a great winner. Because it was a value stock, I actually took a full position and that worked out very well. Here's another value stock. It's TSE. It's in the Russell 2000. So one thing I really like about TSE, besides the fact it's that textbook bull flag, besides the fact that they're rolling dough, they just quadrupled their dividend, this is in the Russell 2000. And I think this is a huge leading indicator of what I'm about to talk about. The Russell 2000 formed a wave 1 and a wave 2. The length of wave 1 placed the wave 2 low can take TSE to a new high. And this is going to be very pretty. If we see TSE above this wave one high, then this is a gorgeous base. This is a gorgeous base. It's also a textbook bull flag with sideways consolidation. The length of wave one, place of the wave two low, says a wave two ended at the 50% fib. The length of wave one, place of the wave two low, says 106 could be a minimum wave three target before a shallow wave four and a wave five higher, and it would pay a nice dividend along the way. So I love dividends. I love the Russell, and I actually did a combination of two things with dividends and the Russell. I bought RYLD, the covered call ETF, to kind of get some positive theta exposure, because I'm normally buying options. So I like some of the covered call ETFs like RYLD and QYLD just to give myself, kind of some theta. Okay, so I have the covered call ETFs, RYLD and QYLD in my portfolio. I bought RYLD recently during this dip. I'll give the most conservative view of the Russell. I don't really think this is the most accurate view, but the most conservative view of IWM, this is a wave one and a wave two. This is a big wave three and an ABC wave four that ended right around the 50% fib. So if the Russell is above 175, then this is a wave one and a wave two, a wave three and a wave four, in a very conservative view. So the very minimum, we're expecting wave five to be the length of wave one, place of the wave four low. Okay, I think that's kind of silly that wave five would stop at 244. So if the Russell goes past 244, let's say it gets to 250, my expectation is that wave five would be the length of wave three, place of the wave four low, and that would take the Russell up to 300. Here's the thing, I don't even think that's accurate. What I think is probably the most accurate for the Russell 2000 looks something like this. This is a 1, 2, 3, 4 wave 5, and this all ended a big wave 1. This is a wave 2 that ended with an ABC correction. So it's the same idea. If we're above 175, we're expecting a lot more upside, but it would be the length of this entire rally placed at this low. And remember, TSE is in the Russell 2000. The length of wave one placed at the wave two low says it, like TSE, formed a wave one and a wave two. And that means that the Russell could go all the way to the 330s for a wave three target. So let's just be clear. I want to see 175 hold, a little tighter would be 188. That's a little too tight, but that is the 50% fib. And at the very minimum, I'm expecting a new high to 244. I think we'll go past 244, and then the next target would be 300. So IWM, I got RYLD to get some of that covered call exposure without having to do it myself. So here's ARKW. We'll stick to ARKW instead of ARK, but this is a very pretty view of the growth sector. Wave one, ABC, wave two, at the 61.8% fib, the length of wave one, place of the wave two low, says ARKW will hold above 72, and this is the left side of the base. This is the dramatic, scary ABC correction, and most people think that there's one of two possibilities. And everyone kind of likes to acknowledge the scary possibility that this is a 2000s dot-com bubble popping right in front of us. The other kind of alternative is that this is a 2008, 2009-ish buying opportunity for a sector that may not have another historical comparison outside of big tech. So right now, for me, it's risk reward. ARKW could be a big winner, similar to possibly, in my opinion, to the NASDAQ in 2009. This is a wave one and a wave two. We're going to hold, in my opinion, above 72 and go the length of wave one, place of the wave two low. ARKW can go to 233 before a shallow wave four and a wave five higher. So that's a long way away. We need to see 72 hold, but we're seeing kind of the writing on the wall. We'll talk about the social media stocks like Snapchat and Twitter, that this is not a sector to be betting against. Growth, kind of similar to a lot of the value names that I talked about, they could be very important in my portfolio, because what if in the future it's not tech mania? More than likely, it'd be Chinese mania, it'd be growth stock mania, and it'd be value mania. So that's kind of what I'm looking for. Here's Roku, definitely going to be moving with ARKW, kind of turning around. 1, 2, 3, 4, 5, wave one, ABC wave two, between the 61.8 and 78.6% fib. I believe Roku holds 125, goes the length of wave one, place of the wave two low, all the way into the 600 range for a minimum wave three target before a shallow wave four and a wave five higher. I know it sounds crazy, but let's be real from an Elliott wave perspective. This is an impulsive structure. There's not really a way to say that this is a B, C that exploded past the 161.8% extension of wave 1. So this is how we find evidence from an Elliott wave perspective that this is an impulse. If we measure the 161.8% extension, this wave 3 goes way past it, has a wave 4 correction, and goes on a wave 5 higher. This is very clearly 5 waves. And this looks like it's 3 waves. When we look at Snapchat in a second, they both kind of have that very quick ABC correction. One thing that bears are right about, stocks fall faster than they rise. So I think that this very quick correction is just that. It's a correction. The rise is going to be, it's going to take some time, but it's going to last a long time. The length of wave 1, place of the wave 2 low, says Roku, Snapchat, Twitter, a lot of ARK opportunities are going to show that the software side of ARK, not just the clean energy side, is going to do very well. I'm looking for 125 to hold. I'm expecting new highs next for Roku. So this is the long-term video. Here's TWLO, very similar idea. One thing I'll say about TWLO, probably Palantir too, probably, a lot of these kind of cloud computing names, is that 3 companies recently, just this month in January, have said that the reason they had nice earnings was because their cloud computing business was doing very well. Google just said it. Microsoft just said it. IBM just said it. I think Mr. Market might be whistling to us right now that we should look at cloud computing stocks. So that's definitely not what the majority of the analysis is based on, but we are seeing some of these software names, especially some of these big tech names, they report these blowout earnings, and the next thing they say is, hey, our cloud computing business is doing very well. So this is TWLO, this is a wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. So right now, if we're above 151, the length of wave 1, place of the wave 2 low, says they made this very difficult because they don't want retail traders in TWLO. They know that most retail traders are liquidated from TWLO, liquidated from Roku, liquidated from XYZ growth stock, and for good reasons. This is a wave 1 and a wave 2. The minimum wave 3 target, if we're above 151, is 565 before a shallow wave 4 and a wave 5 higher. Let's talk about Netflix. I think Netflix is huge evidence. It's just kind of exploding recently, and this is a lot of evidence for a lot of streaming stocks. I think Disney, look at this. Bill Ackman, I'm going to start copy trading Bill Ackman. This guy bought the dip, and he did it for a good reason. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. So right now, if Netflix is above 351 with 331 being a wider invalidation, this is a wave 1 and a wave 2. The minimum expectation is that wave 3 will take Netflix to 818 before a shallow wave 4 and a wave 5 higher. So Roku bulls, they're rooting for Netflix. I know it doesn't seem like Roku bulls are rooting for Netflix. I know the media wants us to think that Disney and Netflix and Roku are all dueling, but they're in the same ETFs. Birds of a feather flock together. This is a wave 1 and a wave 2. The length of wave 1, place of the wave 2 low, can take Netflix to 818. Huge evidence for Roku and Disney. They're all sending the same message. Here's ARKF. We saw PayPal. I saw all these tech stocks just explode in after hours, and then PayPal down 14%. We look at ARKF and Square, Block. This is a wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. Now, I've pointed out that PayPal and Visa are in the iPay ETF together, and Visa is looking very good. I think this is a wave 1 and an ABC wave 2. Right now for ARKF, it's a little tight, but there's great risk reward. The 78.6% fib of 27 lines up perfectly with this wave 1 high. So above those levels, this is a wave 1 and an ABC wave 2. The length of wave 1, place of the wave 2 low, can take ARKF to 75 before a shallow wave 4 and the wave 5 higher. And I love classical traders. I don't want it to seem like I'm, bashing classical trading. I'm a classical trader. But the idea that we're just supposed to wait for ARKF to double before it gets up here, to me, it's worth kind of buying the dip on the downtrend, having a stop, and getting called a bag holder, because even if a hypothetical investor bought ARKF here, that's still going to be better in the future than waiting until it gets to 65. I think this is a wave 1 and an ABC wave 2. The length of wave 1, place of the wave 2 low, says getting called a bag holder will be worth it, because this could be what MasterCard did in 2008. It could be what Amazon did in 2008. Have a huge wave 1, make everyone feel like an idiot, make everyone say, oh, retail got scammed, but it was a 61.8 and 78.6% retracement. If we're above 27, the length of wave 1 placed at the wave 2 low says ARKF, the ETF, could double, it could triple for a wave 3 target before a shallow wave 4 and a wave 5 higher. So I'll talk about PayPal and Square. I think huge evidence for PayPal and Square comes from Visa's breakout and just the general idea that a lot of these growth stocks, even a stock like Tesla is doing well, even a stock like Netflix is doing well. I think that PayPal is a wave 1 and a wave 2. This is a wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. So we're getting close to 130. A wider stop would be 124. The length of wave 1 placed at the wave 2 low says that this is a very similar to Snapchat, similar to Roku, a fast, scary wave 2 that's going to be followed by a massive wave 3. The length of wave 1 placed at the wave 2 low says PayPal is going to go to 374. It's going to do what Visa is starting to do. It's going to go break this July high. So let's look at Visa right now, make sure we know where we're getting these correlations. But if we look right now at Visa, it's sold off with PayPal. It sold off with PayPal from the July high, and they're in the iPay ETF together. So I think what we're seeing right now is that Visa is a leading indicator. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 for Visa. This is another wave 1 and an ABC wave 2. They are both 6% holdings of the iPay ETF, and Visa has kind of already shown that what PayPal is ultimately going to do is it's going to go turn around and it's going to follow Visa above the late July high. In my opinion, this is a wave 1 and a wave 2. Visa will hold these lows of 190. It'll hold this low of 195, and it's going to be above 252. I think that PayPal bulls, they get to have a little party. I think that Square Cash bulls get to have a little party if they see that MasterCard and Visa are above all-time highs. So that's Visa. I think it's a leading indicator that we're going to see PayPal turn around. We're going to see Snapchat turn around. Huge evidence comes from the social media sector for growth bulls, right? If you talk to a lot of people, they're really bearish, a lot of the software names, they're really bearish a lot of stocks, but they're not really that bearish the social media sector. It's important to realize that if Twitter and Snapchat and Facebook are rallying, they're in the software side of the market. They're going to be moving with a lot of cloud computing stocks and a lot of streaming stocks. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 between the 61.8 and 78.6% fib. I believe Twitter, it's a little tight. I think Twitter's going to hold 28 would be a little wide. A little tight would be 32. But I think this is a wave 1 and an ABC wave 2. The length of wave 1 placed at the wave 2 low is going to take Twitter above 80 before a shallow wave 4 and a wave 5 higher. Ultimately, the minimum wave 3 target would be 92 before a shallow wave 4 and a wave 5 higher. One thing I'll say about Twitter, it's in the social media ETF SOCL with Baidu and with NetEase. So it's also kind of evidence for the Chinese stocks. Another thing I'll say about Twitter, it's kind of similar to some other growth stocks that have been around for a while. We have more evidence than just within the cycle from the March 2020 low. Twitter's been trading for a little bit, and before the 2020 crash, it had a 1, 2, 3, 4, 5 huge wave 1 and an ABC wave 2. That means that this is another wave 1 and an ABC wave 2. Twitter can begin wave 3 of wave 3. That is a very big deal. If it's above 28, the length of wave 1 placed at the wave 2 low can take it all the way to 92 before a shallow wave 4 and a wave 5 higher. So there's a lot of reward in the growth sector. To me, the risk is something that I will continue to define. The reward right now is kind of hard to define. This is a wave 1 and a wave 2 for Snapchat, a wave 3 that is very cleanly subdivided into 1, 2, 3, 4, 5 waves, and a wave 4. This is a wave 5 that was at least the length of wave 1 placed at the wave 4 low. We had an ABC correction between the 61.8 and 78.6% fib. So if Snap is above 21, I expect the length of wave 1 placed at the wave 2 low gives a long-term wave 3 target of 102 before shallow wave 4 and a wave 5 higher. It reminds me very much of what Roku is doing right now. It's having that scary ABC correction, that very quick ABC correction where the length of wave A placed at wave B high is where wave C ends between the 61.8 and 78.6% fib. So I think that Snapchat is a lot of evidence for a lot of the growth sector. Let's talk about Fastly. Let's talk about some of these other software stocks. So Fastly is starting to turn around. It's a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So TWLO, Fastly, they're all kind of going to move together. Extremely tight would be 23. That's not too bad, but this is a very high beta growth stock. Realistically, when I invest in growth, I take smaller position sizes. specifically half the size I do in value to compensate for the beta. There is not really a snowball's chance in hell that someone is going to buy a growth stock with a 15% trailing stop. That is not going to happen. This is a wave 1 and an ABC wave 2. The length of wave 1, place of the wave 2 low, ultimately can take Fastly into the 150s. I know that sounds crazy, but that's what growth investing can do. If this is all a wave 1 and a wave 2, Fastly can go all the way up. Fastly can go all the way up to a wave 3 high of 150 before a shallow wave 4 and a wave 5 higher. I think one thing that's important to point out is that we had a lot of leaders in the growth sector. In 2021. All right, it wasn't all doom and gloom like we're led to believe. So I think that Datadog is a big leading indicator for Fastly bulls that this is a wave 1 and a wave 2 that formed from this low that was in May. So I believe that this is a big wave 1 and an ABC wave 2 for Datadog. So if I get my text out, this is an A, B, C correction right at the 61.8% retracement. I think what Datadog has done, I think what Unity Software has done, they have acted as leading indicators for a lot of software stocks with their big breakouts. And now if we look at Datadog, if we look at Unity Software, they are back at the 61.8 to 78.6% fib. And I think Cloudflare is a very similar idea where it wasn't all doom and gloom and growth. There were leaders, and now we have laggard opportunities. For Datadog, the length of this wave 1 rally, placed at this low, says it can go on another thrust higher to about 250. I expect the next time Datadog rallies, it is going to take Fastly with it. I also expect the next time Cloudflare rallies, it will take Fastly with it. So pretty tight for Datadog would be 119. If that holds, the length of wave 1, place of the wave 2 low, can take it up to about 250. If we look at net, it's a very similar idea that we had leaders in the software sector, kind of similar to Unity leading Palantir. We can see potentially that Cloudflare and Datadog are leading indicators of what Fastly is going to do. I think this is a 1, 2, 3, 4, 5 big wave 1 and an ABC wave 2 that ended between the 61.8 and 78.6% fib. If it's getting way too far, I meant to make this video yesterday, but then I waited till February 1st. A little tight would be 76 for Cloudflare. I'm not quite sure it's the best opportunity right now, but what I think is going to happen is that it is going to have a big wave 3 higher. And Cloudflare and Datadog, when they go on wave 3 rallies higher, they are going to take Fastly with it. We are seeing right now, in my opinion, that Cloudflare is leading Fastly, that Datadog is leading Fastly very much in the same way that Unity Software is leading Palantir. So I think that what's going to happen is that this is all a huge wave 1 and an ABC wave 2 for Cloudflare. 58 would be a little wide, but I ultimately think that we're going to see Cloudflare go on a wave 3 higher above 221. The length of wave 1, place of the wave 2 low, would give a wave 3 target of 284. Let's talk about Unity Software and Palantir. Palantir is starting to turn around. Remember that Unity Software and Palantir are in the IPO ETF. So very similar to Lucid Motors, very similar to Xpeng, very similar to Lee. They're not just in the software sector, they are in the recent IPO sector. They're going to trade with recent IPO stocks. So if we look at Unity, I think this is a wave 1 and an ABC wave 2. I believe this is another wave 1 and another wave 2. So very tight would be 90. The length of wave 1, place of the wave 2 low, says Unity can go on a wave 3 to 224. And I expect that when Unity goes to 224, it is going to be taking Palantir with it. I expect actually that Palantir will be outperforming during that time. So if we look at Palantir, we have a little bit of a low to trade against. So this is a stock that has a very high beta. A lot of retail traders fell in love with Palantir. They said it was going to be the next Microsoft, and the problem is they didn't look at the Microsoft chart. This is a wave 1, in my opinion, in an ABC wave 2. The risk associated with recent IPO stocks is that they can go break that wave 1 low because they don't have much chart history. Okay, so that happens. But until that happens, I believe that Palantir has formed a wave 1 and an ABC wave 2. So 8.90 is a little wide, but this is a high beta growth stock. The length of wave 1, place of the wave 2 low, says at the very minimum, Pounder can go to 45 before a shallow wave 4 and a wave 5 higher. Realistically, if Pounder got above 45, it wouldn't stop there. Like XPEV, like Lee, it wouldn't be yay, Pounder tripled. It would be Pounder just confirmed that this is an IPO base. This is a year of accumulation on a stock that is very early in its life cycle. It has a much higher risk reward ratio because of that. So this is a wave 1 and a wave 2. Pounder might be the next Microsoft. It might be the next Facebook. The problem is a lot of people haven't looked at the Microsoft and Facebook charts. So it's all risk reward. Right now, if Pounder is above 8.90, it has a lot of upside. It has a lot of upside. The very minimum expectation is it goes to 45 before a shallow wave 4 and a wave 5 higher. Pounder, another additional downside level is going to come from the IPO ETF. Unity Software, XPEV, Lee, Lucid Motors, this is kind of looking pretty for an IPO ETF that holds all of them. I think this is a wave 1 and an ABC wave 2. The length of wave 1, place of the wave 2 low, can take the entire IPO ETF on a wave 3 higher. A base breakout, it's going to hold the 61.8% fib. Very tight would be 40. The length of wave 1, place of the wave 2 low, says the IPO ETF. Very similar to ARKW, just ended an A, B, C correction where the length of wave A, place of the wave B high is where wave C ended at the 61.8% fib. That means that the wave 3 target, the minimum wave 3 target for the IPO ETF would be 97. So just wanted to give a little tighter level, possibly than 8 for Pounder. The IPO ETF above 40 might be a supplemental level. Let's talk about some of these other software stocks and some crypto. Let's talk about China right now. Here's Alibaba. We have a lot of evidence from Lee and from XPEV that Chinese stocks can do quite well. We also have evidence from Twitter and Snapchat, which are in the same ETFs, the SOCL social media ETF with Baidu and with NetEase, that the entire kind of software sector can do well. So a lot of these Chinese internet stocks are poised to benefit from the general growth theme, the general software theme. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 for Alibaba. I'm going to hold Alibaba for the long haul, but a tight level would be 108. Above 108, the length of wave 1, place of the wave 2 low, can take Alibaba on a wave 3 above 319. The length of wave 1, place of the wave 2 low, says past 319, 372 would be a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1, place of the wave 4 low, then potentially we can see Alibaba go into the 580s in the long-term cycle. So it won't be easy. I'm in it for the long haul, but a tight level right now is 108. Above that level, we could see Alibaba do quite well. A little tighter level, a little more meaningful level would be NetEase. NetEase is looking pretty good. I also want to say that I talk about the bar chart, straddle, and strangle screener a lot. We've seen Baidu and we've seen JD on that screener a lot. So I use that screener to find stocks that have very low implied volatility and very high liquidity. This is completely free. So it's options, long straddle, long strangle. This kind of report will show stocks that have very low implied volatility and very high liquidity, suggesting that institutions are loading up cheap hedges in preparation for a big move. Then Elliott Wave kind of helps pick what direction that move will be. If we look at NetEase, this is a wave 1 and a wave 2. This is another 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 that ended right around the 50 to 61.8% fib. So if we're above 77, I think this is a wave 1 and a wave 2. We can see NetEase be a huge leading indicator. It can break above 170, it can break above 134, while Alibaba is still down here. And if NetEase was way up here, but Alibaba and Wayfair and some of these other Chinese names hadn't yet broken to new highs, NetEase would be a huge leading indicator that they will. It also gives a little tighter level of 77 for Chinese bulls to trade against. Let's talk about Baidu real quick. I know this sounds crazy that, some of these stocks are going to have wild moves, but that's kind of how it works. They don't just do the conservative thing. Someone once said, expect the extreme. I think that we should expect the extreme, and I think the extreme move for a lot of these Chinese names will be to the upside. This is a 1, 2, 3, 4, 5 wave 1 for Baidu in an ABC wave 2. The length of wave 1, place of the wave 2 low, says very tight. Very tight would be 132. Realistically, that's too tight. I think 114 would be a little wider. The length of wave 1, place of the wave 2 low, says that Baidu, like Alibaba, is going to go break this high from last year. It's going to confirm this is the left side of the base. The right side of the base can be a high volume explosive base breakout. The length of wave 1 placed the wave 2 low says ultimately 354 is a minimum expectation. Baidu could go all the way to 400 in the longer term cycles. It wouldn't be easy. There would definitely be pullbacks along the way, but above 114, a little tighter would be 132. I think the risk reward is there. Let's talk about some crypto. Bitcoin, Ethereum, and Ripple, they're slowly rallying. I think that these are also great pieces of evidence for PayPal that they still just want to shake retail out of a lot of these great opportunities in the e-cash sector, the e-commerce sector, which Alibaba also poised us to benefit from. So the long-term view of Bitcoin is that this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. This is another wave 1 and another wave 2. So all that really matters for Bitcoin in the very short term is, will it hold 28.9K? Will Bitcoin and Ethereum hold the June low? If they do, the minimum expectation is very clear. The length of wave 1 placed at the wave 2 low can take Bitcoin all the way up to about 73K before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low, if wave 4 retests the wave 1 high, says the minimum expectation is that Bitcoin would go up to 109,000. So there's a lot of reward. The risk is about $10,000 to the downside. The reward is tens of thousands of dollars to the upside. So that's Bitcoin. Here's Ethereum. Ethereum, exact same idea. We'll just talk about the short term. It's a very pretty view of the short term. There's a lot of controversy in the wave theory community that this is a wave 1 and wave 2. And if you're just looking at Bitcoin, it's hard to see the 1, 2, 3, 4, 5 waves. But I think Ethereum really shows that the clear 5-way subdivision is there from the June low. 1, 2, 3, 4, 5 waves. This is a large wave 1 and an ABC wave 2. I think right now Ethereum extremely tight. Realistically, that's way too tight. But the best level right now is 1709. The June low, if Ethereum is above that, this is a wave 1 and a wave 2. If Ethereum is below that, it isn't. It wouldn't be the end of the world if it broke below 1700, but it would invalidate the idea that this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low, if Ethereum is above 1709, can take it all the way to 5.3K before a shallow wave 4 and a wave 5 higher. So Ethereum and Bitcoin, if they're above those June lows, have a lot of upside potential. I know this sounds silly. I know we're used to making fun of Ripple. I don't think we'll be making fun of Ripple much longer. Here's the thing. Ripple is still below this high from early 2018, late 2017 that Litecoin, Bitcoin, Ethereum all formed, and they've exploded above it. So they want us to think that Ripple is a huge laggard. I believe it is a huge laggard opportunity. This is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. So very tight. Realistically, too tight would be 51 cents. Remember, I was talking about Ripple at the 18 to 22 cent range. And then even when it went up 600%, I was still getting trolled. But anyway, I believe that this is a wave 1 and a wave 2. And I even think that this is a wave 1 and a wave 2. So I don't think Ripple will go below 51 cents. I don't think that Bitcoin and Ethereum will break below the June low. And what I'm expecting is that this is a big wave 1 and a wave 2. Ripple will go in the shorter term cycles on a wave 3 higher to the 161.8% extension of this wave 1. That's $3 before a shallow wave 4 and a wave 5 higher. But that's not even really accurate. I think that the big picture count is what should be focused on. This is a wave 1 and a wave 2. If I take the Andrews pitchfork and I connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, we see a gorgeous reaction on the median. We see gorgeous reactions on the lower bound. And I think what's going to happen is that this is a wave 1 and a wave 2. This large wave 3 won't end until the median of this Andrews pitchfork, which we can see right now would be above $4. So right now, very tight will be 51 cents. Realistically, Ripple is one of those where I just take smaller positions to compensate for that beta, but I think it's a kind of a leverage play on crypto, and I really think that we're going to see Ripple outperform Bitcoin and Ethereum when it rallies.